All right, so let me welcome you again, guys. So today we are going to do question 1. Question 1, the accounting equation. Remember last week, what were we doing? We were doing basics to accounting. Defining what is an asset, defining equity, definition of liabilities, how do you treat liabilities, how do you treat assets, and owner's equity. So with the accounting equation, guys, as long as you know that assets, if just to summarize, assets, they increase on the debit side, they decrease on the credit side. Liabilities and owner's equity, they increase on the credit side, they decrease on the debit side. So on the side, you need to know what is an asset. Examples of assets. Know that under assets, we have non-current assets and current assets. Name current assets and ask yourself, what can increase current assets and decrease non-current assets? Liabilities, again, you have non-current liabilities and current liabilities. You ask yourself, what is a liability? What can increase liabilities? Owner's equity, here we are referring to the owner's interest or share from the business. So please make sure that you know when we're talking about owner's equity for a sole trader, what are we referring to? What are we talking about? So here's question number 1, guys, from a past paper. As you can see, that question, guys, it was out of how many marks? Someone is not meeting their mic here. That question, it was out of 29 marks. Learners were given 26 minutes to complete the question. Analysis of transactions, analyzing transactions. So here in question number 1, you are provided with information relating to Vembe Traders, a business owned by Masala Gumbi for the month of February 2025. The name of the business is owned by who? Masala Kumbi. Masala Kumbi is the owner. But the name of the business is Vembe Traders. Here is the owner, Masala. Maybe we can even do that. Owner Masala, business name, Vembe Traders. So we are going to analyze the transactions for which month? The month of February 2026. Month of February 2026. Here, you are required to analyze the following transactions according to the columns provided. So you need to assume that the bank balance is always favorable. If they are now saying we need to assume that the bank balance is favorable, it means now, guys, we have money in our bank account. So with accounting, guys, once now you are writing an accounting paper, you are in class, you are assisting someone with accounting, you are an accountant, you are working for that business. Now let's assume that you're a bookkeeper, you're an accountant, for which business? Vembe Traders. So we're all assisting Vembe Traders as bookkeepers and accountants. So we need to assume that the bank balance is always favorable. So it means now Vembe Traders, if the bank balance is favorable, on their bank account, they have money, they have a positive bank balance. If it was unfavorable, it means now we have a bank overdraft, we don't have money, but we have a negative on our bank account as Vembe Traders. So we are even given an example, guys, on how we need to analyze the transactions. Here, e.g., we charge our debtor H Maluleke 70 rands interest on his overdue account. We're charging our debtor H Maluleke 70 rands interest on his overdue account. Are we clear? A debtor is someone who bought goods on credit. So H Maluleke bought goods from who? From our business, Vembe Traders. This person is actually our debtor because he bought goods on credit from us. But Maluleke, unfortunately, he's not paying. So now we decided to do what? To charge interest on his overdue account because he's paying whatever, he's not paying whatever amount that he is owing us, the business. So we're charging an interest. What will happen? On the general ledger, the account to be debited will be debtors control. Debtors control is increasing because we are increasing the account of Maluleke by charging him an amount of 70 rands. The account to be credited is interest on overdue account. We're charging interest, we're receiving interest. This is interest income. So interest income, just like any other income such as sales, rent income, they are always credited. The amount is 70 rands. As you can see on the accounting equation, assets are increasing because we're increasing our debtors control by charging our debtor an interest of 70 rands on his overdue account. Are we clear? Owner's equity is increasing because we are getting income, interest on overdue account. So income, they have a positive impact on owner's equity. What about liabilities? Liabilities, no impact. So we need to follow this format, guys, to analyze the following transactions. They were just showing us here what type of structure do we need to follow. So we are now going to our transactions. I think it's just 4 transactions, guys. Maybe we only need at most 20 minutes and then we'll be done. Okay, so let us proceed. Transaction number 1. Paid for telephone via EFT number 245 to Telkom for 7,000. Sorry, let's start again. Paid for telephone via EFT number 245 to Telecom for 750. 350 is for the owner's son cell phone contract. Guys, how much are we paying in total? In total, we are paying 750. The business is paying 750 for telephone. But from the 750 telephone bill, we are actually paying 350. From the 750, 350 is divided to the owner, is divided to 350, where now we are paying for the owner's son for personal use. It means now on your side, guys, from the 750, you are paying a telephone bill for the owner's son of how much? 350. This is for personal use. So if you're going to say 750 minus 350, can you do that? 750, the total amount that we paid, we minus the personal side of that transaction where we're paying the owner's cell phone contract of 350. Please just take away 350 from 750?
400.
We'll have 400. So 400 is for business. So on the accounting equation, guys, accounting equation, we're paying for an expense, but we're also paying for the owner's son's cell phone contract. Just want you to think about it. How are we going to treat this transaction? Here, we agree that we have personal use, and for the business is how much? The telephone bill is 400. So on the accounting equation, this is what we need to do. Let's start firstly with the 300. The 300 is for personal use. Personal use, owner's son, contract, guys. Now we have drawings. The account to be debited will be drawings. So drawings, they are always debited. So what are we going to credit? But here we need to follow the following structure, guys. Here, drawings, here, drawings of 300. So it means now on our side, we're supposed to start with the 400. 400, the amount is 400. So what is the account to be debited? Account to be debited will be telephone expense. So whenever you are paying for an expense, guys, an expense is debited. If you pay for water and electricity will be debited. You pay insurance, you pay advertising, always an expense will be debited. You're paying for a telephone is debited. So what is the account to be credited? We are going to credit bank. Why are we crediting bank? Bank and asset. We're assuming that bank is favorable. It means now our bank account is an asset if it is favorable. But if it is unfavorable, it will be a liability. For our example, bank account is an asset. So an asset now is decreasing because we are paying telephone bill of how much for business? 400. So what will happen now on the accounting equation? On the accounting equation, our assets are decreasing, minus. Why? Because we are taking money away from our bank account to pay for telephone. Bank is decreasing, assets are decreasing. Owner's equity, whenever we are paying for an expense, paying for water and electricity, insurance, telephone, incurring an expense, paying for an expense, owner's equity will decrease. What about liabilities? No impact. So we are done with the 400 part on that transaction. Now let us move to the 350 part. 350, remember, is for personal use, the owner's son cell phone contract. So we need to debit what? Drawings. We debit drawings. Every time when we have drawings, we debit them. That is the account to be debited. What are we going to credit? We are already given that we need to credit bank because we are paying. Whenever we are paying, guys, bank is decreasing on the credit side. That is the account to be credited because we are paying, taking money away from our bank account. How much is 350? Again, on the accounting equation, this is what we need to do. Assets are decreasing again. because bank is credited, is the account to be credited. We are taking money away from our bank account. Are we clear? Owner's equity, just like expenses. If you're paying for an expense, if you are taking anything for personal use, that will have a negative impact on owner's equity. What is happening again? No impact on liabilities. Guys, are we happy with that transaction? Do you want me to explain again? Just need to unmute your mic and say, sir, please explain again. Are we happy with transaction number 1? Guys, this is what I wanted to talk about as well. In class, you go to class to ask questions. You are attending a class to ask questions. Please, whenever if you go to your school, with your teacher, you go to class to ask questions. That's why you are learning. So let's move to transaction number 2. Number 2 received an EFT from a tenant B. The name of the tenant is that is vendor, hey, Maruba, for the monthly rent of how much? 3,000. We received an EFT from a tenant B. We're getting money, an electronic transfer of funds. We're getting money from who? A tenant B. Why are we getting money from tenant from B, Maruba? Because this person is actually our tenant. Our tenant is paying rent. So we are receiving money. The account to be debited, it will be bank, already given. Debit bank. What is the account to be credited? Remember, for each debit, there will be a corresponding credit. We credit rent income. Rent income, whenever we're getting any income, guys, whether it's sales, rent income, fee income, profit on sale of an asset, income will always be credited. Interest on overdue account, if we're charging a debtor, interest on overdue account, we're going to get interest, which is interest income, then you credit it. That is the account to be credited. How much is the rent that we're getting from B Maruba? 3,000. What will happen to our assets on the account equation? They will increase. Why? Because we're getting money. Money is deposited into our bank account by B Maruba. Accounting equation, rent income. Whenever we have income, they have a positive impact on owner's equity, zero impact on liabilities. Any questions with question 2? Question 2. Guys, are you still there? Can you still hear me?
Yes.
Yes, and Zilantle, you were about to say something.
I said it's fine, sir. You can carry on.
Okay, thank you so much. Let us proceed to the third transaction. Goods sold on credit to B Mad daughter for 8,000. The cost price of those goods, it was how much? 5,800. We sold goods on credit. We are selling goods on credit to who? B. Madoda for 8,000. What is this 8,000, guys? Can someone please just tell me what you think? What is this 8,000? Guys,
Trading stock.
Sorry, here. I can't hear you.
I
This
think
8,000. Yes.
I think this 8,000 is the selling price because they want to aim profit.
So the 8,000 is the selling price. So whenever, guys, we are selling goods, you'll have the selling price and the cost price. If today you decide to say, at school, I am going to sell maybe second-hand calculators. Obviously, maybe someone who's doing matric, they decide to say, no, I no longer need a calculator. On your side, if you are a person who's selling calculator, assume that you are now a business. You are selling second-hand calculator at your school. Where are you getting them? From people who just passed matric. Someone will pass matric and then they say, hey, I am selling my old calculator for how much? 200. Maybe you are buying this old calculator for how much? 200. You are buying it at 200 and then you decide to sell it, the same calculator, to your fellow classmates since you are doing grade 10 at how much? 400 or 300. So the 200, since now you are buying this old calculator from who? People who just passed matric would be classified as cost price. This is the cost price. It costed you how much? 200 to buy the calculator. Now you are selling the calculator at how much? 400. The 400 is the selling price. Remember, you want to make profit as well. So whenever we have any sale, selling, goods sold, you must know that you have the cost price and the selling price. So goods sold on credit to who? B. Madoda for 8,000, the selling price, and the cost price for those goods, it was 5,800. So I want you to note something. Goods sold was selling goods on credit. Just like maybe on your side, if you are selling calculators, a second-hand calculator, you can just say, if maybe you have someone who needs a calculator, but they don't have money, you will just say, hey, I am going to give you this calculator with a selling price of 400, but you will pay me later on whenever you have money. So that person will be a debtor. It will be someone who's owing you money. So whenever we're selling goods on credit, we have some, debtors control will increase. We have a debtor. So goods sold on credit for how much? 8,000, the cost price is 5,800. So on your side, guys, you firstly need to deal with the selling price part. You have the selling price part and the cost price. Let's go to the accounting equation. On the accounting equation, we're dealing with 8,000 first. Whenever we're selling on credit, debtors control will increase. That is the account to be debited. Debtors control when we are selling on credit. What is the account to be credited? We are selling goods on credit, selling sales income. Sales of how much? 8,000. Whenever we're selling, just know that the account to be credited is sales. So now, how much? 8,000. Accounting equation, assets are increasing. So the more people buy on credit from the business, debtors control is increasing. That is the account to be debited, assets are increasing. If on your side, maybe you have an account with Mr. Price, they allow you to buy on credit. Whenever you go there at Mr. Price and maybe buy clothes for 1.5, you are going to be classified as a debtor. On their side, if you take goods on account, their debtors control will increase with the selling price of the goods that you are taking on credit. So here we're selling goods to debtor, we're selling goods on credit to debtor who? Debtor B, my daughter. So what will happen to owner's equity? Sales, guys, sales, this is actually an income. Sales income. Income, they have a positive impact on owner's equity. No impact on liabilities. Then now you have the selling, the cost price part. The cost price of those goods, it was 5,800. But grade 10, guys, this transaction, the one that we're analyzing now, make sure that you understand it is always there. So the cost price part, the account to be debited, we're going to incur cost of sales. So whenever we are selling, just know that cost of sales will be debited, the account to be debited. What is the account to be credited? It will be the trading stock or trading inventory, doesn't matter. Why are we crediting trading stock? Because now we are decreasing our trading stock. By how much? 5,800. Okay, I just want you to think about this practically. Guys, remember the example that we're making about you selling calculators. Let's assume you have 2 calculators that you bought from who? From people who passed matric last year. Each calculator costs how much? 200. 200. This is the cost price. Remember, you are buying here. This is you, guys. You want to sell these calculators. At how much? 400 each. 400 each. You have 2 calculators that you bought. Can you notice that if you sell one, yes, you are going to get 400. If you sell one, can you notice that you also need to remove the cost price because that calculator is no longer there. You've sold it. That's why now we are crediting trading stock because we have actually sold goods for how much? 5,800. Look what is happening to our assets. Assets are decreasing because trading stock is decreasing. Cost of sales and expense. Expenses, they have a negative impact on owner's equity. There's no impact on liabilities. Please don't memorize and say there's always no impact on liabilities. No, there will be a transaction that will affect liabilities. So guys, goods, I want to add one more point here. It's either you sell goods cash or credit. But here we sold goods how? Goods were sold on credit. Can you notice that if you are sold on credit goods, debtors control will be the account to be debited. But if goods were sold cash, instead of having debtors control where I'm highlighting, guys, can you see where I'm highlighting? instead of having debtors control, you're going to have bank because you have sold goods cash and then you are getting money in your bank account. Bank is the account to be debited when goods are sold cash to customers. Any questions with transaction number 3?
So I've got a problem here. Sometimes I can see on the glass they say selling price minus cost price. Then they enter that amount that they have found. Now I see you don't do that. Can you kindly explain for me?
So here, maybe I don't fully understand your question. So, but I heard you said in class, they will take the selling price, which is how much? 800. And then they minus how much? 5,800, the cost price. So on that case,
Yes.
usually they will be trying to find what? The revenue, not what we are doing now.
Oh, okay, thank you, sir.
Yes, because even here, if you're buying a calculator from someone who passed matric last year, for how much? 200. You sell the calculator, 400. If you want to check the profit, the amount that you have made, your profit, or yes, revenue, actually revenue, it will, sorry, the profit, it will be equals to profit, it will be equals to revenue minus the cost. So the revenue, you have made 400 from selling an old calculator, you bought it at how much? 200. Then the profit, it will be 200. All right, number 4, what transpired, what happened? Made an EFT to Time Bank. Who is making an EFT, guys? Made an EFT. We are making an EFT to Time Bank for the payment of loan. Which means now our business, we borrowed funds. We took a loan from Time Bank, but now we're making a payment. We're paying our loan. We don't know the amount of the loan. Whether it's 20,000, 100,000, we don't know. But what we know is that now we're making a payment of how much? 12,400. Made an EFT to Time Bank for the payment. We are paying a loan. Right? So made a payment of 12,400. What else are they saying? 1,200 was made for the interest on the loan for the month of February 2024. It means now, guys, the total loan is how much? So the total payment that we have made is 12,400. From the 12,400, you need to note that 1,200 was for interest on loan. You need to minus 1,200. Can you please do that? I don't have my calculator with me. 12,400 minus 1,200. Or maybe I think I'm reading
11,200.
11,200. Guys, actually I am interpreting this transaction wrongly because here, let's read again. We made an EFT to Time Bank for the repayment of loan. How much was that repayment of loan? 12,400. And then another payment of 1,200 was made for interest on loan for the month of February 2026. So that 12,400, guys, it does not include the 1,200. They were going to be specific to say included in the repayment of loan is 1,200 for interest on loan. Do you understand what I'm trying to explain here? If the 1,200 was included, the statement was going to be different to say included in the repayment of loan of how much? 12,400 is the 1,200 paid for interest on loan. So this 12,000 is strict, it's only strictly for the loan. The 1,000 is separated, 1,200 is separated as interest on loan. So let's firstly deal with the 12,400, the repayment of loan. Paying a loan guys, liability. Liabilities, they decrease on the debit side. So loan will be the account to be credited. Because we're paying a loan, whenever we're paying a loan or whenever we're paying any liability, that liability will be the account to be debited. Because liabilities, they decrease on the debit side. Okay, so account to be debited, account to be credited is bank. Why bank? Because we are taking money away from our bank account. We are taking money from bank and pay for a loan. Bank is decreasing, assets are decreasing. For how much in total? Is 12,400. What will happen now to the accounting equation? Assets are decreasing because bank is decreasing. Is the account to be credited? Owner's equity, no impact on owner's equity. Liabilities are decreasing because we're paying a loan. We're reducing our loan. We're reducing our liability. We're reducing the amount that we owe. And then the second part of that transaction, we have 1,200. That 1,200 was for interest on loan. Interest on loan, guys, an expense. Just know that expenses, they are always debited. Debit interest on loan. We're paying an interest. Remember when I said whenever we're paying for any expense, whether it's interest on loan, telephone, advertising, could be insurance. If you're paying for an interest, you're paying for an expense, expenses, they are always debited. Paying means now account to be credited will be bank, because we are taking money from our bank account to pay interest of 1,200. On the accounting equation, what will happen to assets? Assets are decreasing again because bank is decreasing. Owner's equity, we are paying an expense, guys, interest on loan. Whenever we're paying an expense or incurring an expense, owner's equity will decrease and there is no impact on liabilities. Okay, so I think we are done with our example for our lesson today. So if you have any questions, guys, you can ask. And please note that I've recorded this lesson and then I will send you the recording so that when you get time, you go through the lesson again and make sure that you understand. So I've sent the question paper on the group, question 1, question paper and the memorandum, and then I will send the recording as well. So Siphokazi Ndlelantle, Mokgethwa Mokgadi, are we okay? Any comments, questions, suggestions, guys?
So far, so good for me now.
Okay, no problem. So please, guys, term 1 will help you. Term 1 topics, they will be there as paper 1 for your June. So we're working towards June now, and we need to take a different approach and try to always improve, guys, because even on my side, I'm constantly trying to add something. Even now, I've decided to say now lessons, they will be recorded so that students, they can have the recording and go back at any time. So let's try to always seek for any areas of improvements. Try to reflect. You did get your term 1 report. Try to reflect and say, how can I improve from this subject? Whether it's maths, physics, accounting, business. And mostly, guys, try to forget about your teacher. Talk to yourself and say, how do I get maybe the desired percentage on maths or accounting? If I want 80% or 60, alone, without the teacher, how can I get 80%? You have educational videos on YouTube, guys. As well, on my side, I do record lessons. Once you have that mentality to say alone, I'm telling you, when you go to class and talk to a teacher, you will be someone who is more proactive, who is open-minded. All right, so in that note, on my side, I am going to say good night to everyone. And then some people who are going to meet tomorrow with grade 11s, we're doing bank reconciliation statement. So good night, guys.